Today we're going to look at what I like to call a symmetry setup that we had in TWLO. Okay, and we're looking at the daily chart. Now the definition of symmetry is similarity or equality when comparing swings in the same direction. And in this case, we had a prior decline from, looks like November 8th through the 20th that lasted 8 trading days and $27.34. And as we started to pull back, I projected that from the recent high, and that gave us 73.14 as a possible support decision. Besides that symmetry, we also had 100% of this first swing down. That gave you support a little bit lower at the 72.23 area. So that gave us a general area to watch or anticipate for a possible low to be made, because check this out. Again, here's the symmetry in time, 8 trading days down and 8 trading days down. And then the symmetry in price, where it is similar rather than equal, is, the first decline was 27.34, the second decline was 27.32. Close enough. So once that occurred, there were some buy triggers for a swing trade entry that came in, starting with the aggressive swing trade trigger on a 15-minute chart around here. And it's not over yet. If this last low is more important in the bigger picture, then we're still looking at a potential upside target, or at least target number 1 at this 107.90 area. But what we need to see in order to expect that we can see that target is we need to clear this immediate hurdle that comes in at 87.94 to 90.03. Okay, now that particular hurdle comes from just taking the retracement of this prior high to low. That's where the 618 comes in. And then also running 100% of this prior low to high swing. Okay, here, this low to this high, $14.79 projected from this low gives you 87.94 as possible resistance. And you can see that this swing is also similar at 14.95. So bottom line, as long as this last low remains intact, I would look at pullbacks for new entries in TWLO, and hopefully eventually it does push back through this hurdle from that low and then eventually heads towards this target at 107.90. When am I wrong? Well, I'm dead wrong on this if we take out this last low. But you also can refine the risk by going to an even lower time frame chart. For example, let's see if we do a 15-minute. And you can see if we can maybe refine an entry here. So on the 15-minute chart, this will actually show you where we originally triggered against this support, that time and price support. Here you had the moving average crossover. Here you took out a prior swing high. Once both those things occurred, that was an official buy trigger on the 15-minute chart. Now, if you don't want to risk to underneath here, because, if you bought it here and risked to underneath here, it wasn't a ridiculous amount of risk. But if you buy it here and risk underneath here, it's not the best low risk setup, right? So what we can do is take projections of these prior declines, and then we're going to look for areas that stand out as far as the possible support. So I'm going to take this other swing here, this other swing here, run a couple of retracements, and that will identify some areas that you can watch for possible support on a pullback. Actually, I would watch this area. I would say that ideally I want to see it hold above this 78.86 area at this point if this new trend is going to continue to hold up. I mean, we may not pull back into this area, okay, but ideally we hold above it somewhere if this last low is any good and if we're going to make that bigger picture target.